Well, you want me to be very specific, which I don't really want to be. So I think it's fair to say that we still need, I would think, a couple of significant moves still in terms of the policy rate. We have had two already, and I think something in the same range is probably called for this meeting and probably also the next. I think we still need some time to debate internally what the exact step will be, but I think we need significant steps still.
And if we get to something that looks like the neutral rate next year after a couple of rate moves this year, is it then time to pause and wait to see what happens next, or are you in the camp that feels you just continue through the neutral rate to try and make sure you secure a positive cost of capital?
We still have some months to decide on that. Of course, it will and it should depend on how the inflation outlook is changing. We need to evaluate the impact of the hikes we have taken by that time. So probably towards the end of the year, early next year, is the time to sort of evaluate the situation closely again and see how far should we go and what should be the next steps in terms of the size also of individual decisions. But looking at the situation now and how elevated the level of inflation is, I think it's quite reasonable to expect that we might need to go above the neutral rate, even if it's very difficult to define where it exactly is. But intuitively, I think it would make sense.
Is there any reason why the bank can't reduce the balance sheet and continue to hike interest rates? It seems there's a difference of opinion on the Governing Council as to whether you hike, then reduce the balance sheet, or whether you can hike and reduce at the same time.
I think we have had a reasonable sequencing of policy decisions, but I think the question of starting to gradually to also reduce the balance sheet and the monetary policy portfolio, that certainly should be soon on the agenda. I would think that's probably a discussion for the early part of next year.
Some of the council members from southern European states are perhaps unsurprisingly a bit more measured as to how quickly they think rates should go up at this stage. Do you have any sympathy with their perspective, given that they do have a lack of fiscal headroom, which means that there's a limit to how much their own governments can try and offset some of the pressure from higher energy prices and higher interest rates?
Well, I have sympathy for all the different opinions I'm hearing at the Governing Council meetings. Of course, there is a risk of a worse sort of economic slowdown. We already see that the outlook is quite weak. But even so, it doesn't look that the pressures for inflation really are abating that quickly. So I think that still calls for some further forceful decisions still by the ECB. But then at some point, of course, it depends on how the economy is actually doing next year. We know there are risks when it comes to the energy supplies, the energy prices, that at the end has an impact on the economy. But it might, even if the economy is doing more poorly, it might at the same time mean that the price pressures from the energy side in particular, they might be even stronger. So it makes it more difficult for us to slow down with the tightening of monetary policy as well.